Okay, so let's make a full breakdown of the situation that we currently have for USD CHF. Now, starting here from the monthly time frame, what we have is a market which is currently testing previous monthly resistance, which is now turned here support and demand. And as we are testing previous resistance turn support, we could expect a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. We can also notice how after an impulse we had a correction, and if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market just retraced exactly to the 0.618 of the Fibonacci taken on this monthly impulse, which is a very strong level of support and demand. The next one would be the 50%, which we're currently testing, from which a rejection to the upside definitely seems possible. Dropping down on the weekly, what do we see? From a weekly perspective, we can see how this area was acting as very strong weekly support here. Again, here the market then broke it to the downside, went for the retest, rejection lower, break back above. At this point, this previous resistance is now turned support here, and what we could expect is a potential rejection of this support to the upside for the completion of an impulse correction, an impulse pattern to the upside. Also here, since we have an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And also here that 0.618 has been tested, confirming once again that there is a possibility for a rejection to the upside. Going down on the daily time frame, what we can notice is that in creating this move to the downside, the market also printed an M pattern. And in general, after the creation of an M pattern, what we want to see is for the market to create a rejection to the upside, at least to the 0.32 of the Fibonacci taken on the daily impulse. In this case, taking our Fibonacci on the impulse to the downside would give us a first upside target at this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CHF, we can see how with the last report we went from minus 2.2k net positions to now having minus 4k net positions with 700 shorts added to the last report and 1k longs getting closed. This is overall bearish for the CHF, which could make USD CHF create a rejection to the upside and complete the pattern at the neckline. Now, how we could be approaching this potential rejection to the upside, at least to this 0.32. As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing potentially also with students is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.